Hello and welcome to this, the Crypto Club and Digital Assets Weekly Catch-Up on Zoom. It is Sunday, the 26th of November, 2023. And as is always the case, we never quite know what we're going to be talking about today. These sessions are open to novices and experts alike, and we get different people coming along each week, and we talk about what they want to talk about. So it may be crypto basics, we might be talking about NFTs, DeFi, ICOs, STOs, TGs, any other three-letter acronym really. We also talk about the metaverse, we talk about privacy coins, projects, activities that are going on in space. We've also got our Gone in 180 Seconds session, which is where people can talk about their project, initiative, or company for 3 minutes without the aid of slides or PowerPoint or any other visuals. They just get to talk about it and then we ask some questions. So if you'd like to come along and talk about your initiative in some way, do register. There's details in the link below, and we welcome everyone to come along. Equally, if you're a novice and you're just beginning in this space and it all seems a little bit confusing and you need a little bit of support and some basic guidance, come and join us and let's have a chat. Anyway, with that, let's see who's going to come and join us today. Hey, Daniel.
Hello, how are you doing? You all right?
I'm good, thank you. How are you today?
I'm great, thanks.
Excellent. Well, welcome back. We'll see what we get to talk about today.
Yeah.
Who really knows? It was an interesting session last week. Hope you picked up some useful things and things about.
Yeah, I really enjoyed it. I'm really enjoying just keeping coming every week. To be honest, I'm learning loads. Just kind of streamlines my research in a way.
Mm-hmm. It allows you to think a little bit more about what you might need to look at and less about what you realize you don't need to know about.
Yeah.
Which sounds a bit counterintuitive, but definitely that's good. And looks like Gabrielle's joined us as well. Hey, Gabrielle.
Hi.
Hey, how are you this evening?
How are you?
Yeah, good. Are you still learning?
Yes.
Yeah.
Yes.
You stay quiet and you just listen and you
Exactly,
soak things in.
Yes. But that's everything and every day is very interesting. So
that's good.
Thank you very much.
Are you still looking at? Was it mainly at the Web3 side of things that you were interested in?
In what?
Was it Web3 that you were mainly interested in, or was it the crypto side?
No, crypto side and Web3 and so everything. Yes.
Okay, that's good. Excellent. So you've just been joined by Johannes as well. Hey there. Is Johannes going to come off mute?
Yeah, and I was struggling there. How you doing, Gary?
I'm good, thanks. You're probably having a really nice conversation with yourself then.
Yeah, something like definitely. But yeah, nice to speak to you all. Enjoyed last week's meet as well. So, and thanks for adding me on LinkedIn as well, Gary.
Yep, no problem at all. Always happy to extend the network and share and learn with each other, whether it's via this channel or the groups that I run or LinkedIn and that kind of thing. That's great.
Certainly.
So remind me again, Johannes, what was your area of interest from what we were talking about previously?
Well, pretty much all of it. So, I guess the ordinals chat was pretty interesting because I thought I had a decent grasp on it, but that was kind of enlightening. I heard about UTXOs quite a bit, but again, that was another thing, and it's become quite relevant, hasn't it, in the last couple of days as well with Vitalik Buterin's Vitalik's kind of chat in Turkey, and the whole kind of trying to decentralize staking, and then Charles Hoskinson kind of baiting him, isn't he, as well? So saying how Cardano's already done that. So that's all been again, it's one of those things. That's why I enjoy kind of joining loads of these kind of groups and just really in-depth chats, because it all becomes relevant one day.
Yeah. And it's something I find fascinating that if you go to lots of events and that, I'm still the same where I don't understand all of what's being talked about. But I learn a little bit at each session in some way.
Yeah.
And you're right. Charles Hoskinson doesn't hold back on his opinions, which is great. Vitalik is a fascinating character.
Yeah.
But is in a league of his own. Should we say he's incredibly bright and incredibly knowledgeable about his stuff. It's really good. But it's interesting because I think it was Daniel, you were actually the one who were asking about ordinals last week, wasn't it? Because one of the things that I thought about is that I was watching a YouTube video today, and it was another of these ones that's predicting, future market prices based on demand, supply, this kind of thing. And it was talking about the growing number of crypto wallets. So I think there's about, I think on Bitcoin, there's something like 50 million crypto wallets now. And when you chart it, it's like growing and growing and growing. And so everyone's saying, oh, that's great. There's now 50 million wallets. That means there's more and more people getting into crypto. And it's when you start looking at how much, in terms of how much Bitcoin is held in each of those wallets, that you realize that it's not necessarily true, because a Bitcoin ordinal, as we mentioned last week, for those who weren't on, we're talking about ordinals, which are effectively an entry on the Bitcoin blockchain, or it can be on other blockchains as well, which can represent as little as 1 Satoshi. And a Satoshi is a 100 millionth of a Bitcoin. Well, what it means is that on the blockchain, you can have an entry of who owns a Satoshi. And so you can use that as kind of like a share ownership type thing. Well, if there's loads and loads of increase in ordinals, so they're kind of like NFTs, then that means there's loads and loads of these wallets which have got like a Satoshi in them. So it's not an indication of general Bitcoin adoption. It's simply that people are buying these tokens and they're so cheap that they'll create a new wallet and create new wallets and that. So I found that fascinating, because someone was doing a talk as well about the halving that happens every 4 years on Bitcoin. So for those who aren't aware, when Bitcoin first started and the blockchain went live in 2008, the reward for mining a block was 50 Bitcoin. And then every 4 years, that reward gets halved. So in 2012, it was 25 Bitcoin. In 2016, it was 12.5 Bitcoin, and so on. So currently it's 6.25 Bitcoin. And the halving takes place every 4 years. So the next one is in April of next year, when the Bitcoin miners will get 3.125 Bitcoin for mining a block. And the reason it halves every 4 years is that it's a kind of like an economic incentive. First of all, that it means that there are fewer and fewer Bitcoin being mined, so conceptually increases the scarcity value in some way. And also it reflects in some way compute capability, although the algorithms can get more complex to cater for that. But it was interesting because this person was saying, oh, well, you get this halving every 4 years. And so it's pretty predictable that Bitcoin's price just before the halving goes up, and then just after the halving rarely goes up. And they're saying, oh, this always happens, and it's happened 4 times now. But then they were linking it in with the number of wallets and this kind of thing. It's like, no, that's not actually how this works. So I just found it really interesting. So I see we've just been joined by Hugo as well. Hey, Hugo.
Hi, how are you?
Hey, good. I don't think, have you been on one of these calls before, Hugo?
Yeah, this is my my second call. Last week I joined actually a little bit late, but yeah, no, I'm happy to be here, and I plan on being here every week.
Excellent, that's good. It's always interesting because we get a variety of people who come along each week, and then we get other people who come in for a week or two and then drop off and that. So I think Daniel's becoming one of our regulars at the moment as well, as he's learning, which is great. So the more the merrier. And we've got Eric's joined us as well. Hey, Eric, I didn't see you there.
Yeah, hey guys.
Good morning to you.
I woke up kind of late. I'm still in bed. I had a long day yesterday, and so I slept in today.
Okay. Yeah. I guess, are you going to Abu Dhabi this week? There's a big conference on out there, isn't there?
No, it's a big thing, but I'm not going. I'll probably be in Dubai in March.
Okay.
We have a VOW TLN conference there. But yeah, I'm really trying not to get on planes too much. I hate the whole experience.
Mm-hmm. It's designed to not be enjoyable these days, is my thinking about air travel.
No, you're exactly right. It's a war against the airfare industry because of the whole global warming idea that we shouldn't be spending fuel. So it's dissuade the masses from travel. I mean, this connects into the 25-minute cities and all of that kind of stuff, if you've heard about that.
Yeah,
you in England. But...
Well, in the UK, because we're such a small country, they're actually calling them 15-minute cities.
15 minutes, yeah. I think 25 minutes in Australia, but it's like it's fine for the guys who own their own jets to fly around the world, spend these tremendous amounts of fuel, but it's not okay for us to go visit relatives, and have to fly. So they make it really hard.
Yeah. It's a topic for another group, probably. Definitely on that.
Yeah,
right,
exactly.
So let's swing it all back to crypto. I don't know if anyone's got any immediate questions or anything they've seen or heard they'd like to share. Daniel looks like he's poised there.
I'm ready.
Go for it.
So, I was on a Bitcoin base call the other day during the week, and their argument was that that Bitcoin is probably the only cryptocurrency that can work, and they'd like to be proved wrong. And I did a little bit of research, and I haven't really formed an opinion yet, just because I don't have a deep understanding of a lot of other cryptos, bar Bitcoin. But the conclusion I came to is there anything like Bitcoin, is what I wanted to ask. And then secondly, is there anything as decentralized or more decentralized than Bitcoin?
So I'll tackle the first question because that's fairly easy. Is there anything else like Bitcoin? Well, actually, Bitcoin is just a protocol. It's software that runs on a bunch of computers that keeps them all in synchronization, and it uses Bitcoin, the cryptocurrency, as the means of economically incentivizing people to mine more Bitcoin. With it being software, that means it's copyable. And so you get what's called a fork, which is where people take a copy of the software and they modify it in some way, and they spin up their own network of computers and they create their own cryptocurrency. So as well as Bitcoin and the crypto symbol BTC, there's Bitcoin Satoshi Vision, which is BSV, which is the product developed with N-Chain and Craig Wright, who claims he is the original Satoshi Nakamoto and spends a lot of time going to court trying to defend that at times. There's also Bitcoin Cash, which is the symbol is BCH, which is promoted by a guy called Roger Ver, if I remember correctly. And Roger will argue that Bitcoin Cash is the real Bitcoin. So that there's three variants of Bitcoin straight away, where they've taken pretty much the same software and made changes to it. So they've either done things like they've changed the block size, they've made it bigger so you can get more transactions through, or they've done some other tweaks. So that's three versions of Bitcoin straight away. The Bitcoin that we tend to talk about, the BTC, the thing that makes it different is simply user adoption. So the sheer number of people who have got Bitcoin in their wallets, whether they've got involved in it, everyone's heard of Bitcoin, whereas not so many people have heard of Bitcoin Satoshi Vision, not so many people have got Bitcoin Cash. Yeah, exactly as Johannes says, it's the network effect, that the sheer scale of adoption of BTC greatly exceeds any other variants of those things. So in terms of similar to Bitcoin, there are several other Bitcoins. And then you look at, there are other cryptocurrencies. So we mentioned Charles Hoskinson before, whose background, he's worked with various companies and he's developed Cardano. Cardano is a different cryptocurrency, a different blockchain, which has its own native cryptocurrency, which is ADA, so AADA. And that is more akin to the likes of Ethereum, which again you've got Ethereum, the blockchain, but also Ethereum, the cryptocurrency, ETH, which has got smart contracts and programmability. And even ETH, so Ethereum, there's a fork of that, which is called Ethereum Classic, which is ETC. So again, it's very similar code. With ETC and ETH, they split off a few years ago. I think it was 2017, as a result of what was called the DAO hack, where there was a DAO, which was a decentralized autonomous organization. So it was effectively a group run by software, a smart contract, where there was a bug in it that went wrong, and there was some disagreement about what the Ethereum community was going to do in terms of how they were going to fix that bug, and whether the people who'd lost a load of money would get their money back in there. And that's what caused this fork between ETH and ETC. So there's all sorts of these things. So I've got all these icons here of all these different cryptocurrencies. Many of them are simply copies of something like Bitcoin or Ethereum, where they've then modified the code in some way. So that was a very long answer to the other alternatives to Bitcoin. So in terms of software, protocols, that kind of thing, yes. In terms of mainstream adoption, not yet. I don't know how many actual real Bitcoin users there are, but it's believed to be in the millions, which is probably greater than most of the other cryptocurrencies. And I've managed to completely forget what your second question was.
That was a great answer, by the way. The second part of the question was, is anything really as decentralized as Bitcoin or counterparts, from the first one?
So it kind of depends on what people mean when they use the term decentralized. So you've got decentralization in various guises. You'll probably be aware that, picking on Bitcoin again, you've got all of these computers running around the world doing Bitcoin mining. And they are all around the world. However, they are quite concentrated in some respects. That there's a lot of them in China, Mongolia. There was actually a lot of Bitcoin miners in Germany for a while as well. And so it depends what you mean by decentralized. So certainly Bitcoin is heavily distributed, as in it runs on a lot of different computers, but the geographic location of them might be quite limited. So there's certainly, there are crypto mining outfits. A lot of them were in China where it was cheap energy. Mongolia, I think there was a lot of hydroelectric power that they were using, so there was a lot of crypto mining there. There's been some up in Iceland, I think it is, where they're using like geothermal energy, and it's cold as well. But one of the problems about crypto mining is that the energy consumed is not just in the computing, but in the keeping the computers cool, because the temperatures of them get really, really high. And so you need lots of air conditioning, and that actually uses a fair amount of energy. So that's why mining somewhere where energy is cheap is good. Mining somewhere where it's cold is good as well. So it keeps a bit cooler. Hey, Lena, good to see you join us again.
Hello, yeah, sorry, a little bit late, but I'm here.
Hey, no problem. You're back. That's good. So I don't know if anyone's got any other thoughts about decentralization.
Yeah, I'd add. So in regards to the first part, I think it was a brilliant explanation. But something that's helped me over the years to kind of compartmentalize all the different blockchains out there as well is obviously like put them in categories. And the easiest way really is, I guess, if you go to like CoinGecko or CoinMarketCap, they've already done that for you to a point. Some of them kind of overlap. But yeah, it's your explanation is fantastic, Gary. But if you want to take it a step further, you want to know basically if a protocol or an application or a blockchain is trying to solve a particular problem. So I don't know. I remember like in 2018, you had something called Nano, which was trying to do payments. I guess XRP in a way is also doing that. But yeah, there's different blockchains trying to solve particular problems. So you can't necessarily say, is there a direct competitor to Bitcoin as such? There are others out there, but I don't think there's many actually trying to be like Bitcoin. They're all kind of different in that sense. And yeah, further to your point in regards to decentralization, that again, Gary's spot on. But then you've also got is the distribution of coins or tokens decentralized, or is that going to be your metric that you want to describe as a decentralization? Cardano, going back to Charles Hutchinson earlier, you could argue Cardano is very, very decentralized because I think they've got something like 3,500 validators out there. But then again, there's also kind of like arguments about that as well. So I'm not very technical, but yeah, just to kind of to add to more what Gary said earlier.
Yeah, I think so. And the other thing as well, as I say about decentralization, is that decentralization is actually about the governance aspect of the blockchain. Is that decentralized? So is the decision making decentralized? And you then have the additional problem that invariably, and this is where I think Bitcoin's fascinating, because I think of Bitcoin as an experiment, and it's proved certain things, it's disproved certain things as well. And decentralization is a fascinating one, that most of the Bitcoin network access to it is not decentralized. So you think about how do you typically interact with Bitcoin? You go via an exchange. So you go via Binance, which is a single organization, so that's not decentralized. Or you go via Kraken, which is not decentralized, or you go via crypto.com, which is not decentralized, and so on. So this is why I'd argue that a lot of the cryptos are distributed in that, the computers are all over the place, but there are points of concentration. So Daniel will be familiar with the term risk concentration, which is, how many risks there are in a particular area and all this kind of stuff. That's kind of true with crypto as well, that, even if Bitcoin was totally decentralized and distributed evenly with computers all around the world and this kind of thing, then when you try to interact with it via an exchange, the exchange probably isn't decentralized. So a long answer, but hopefully that provides some clarity and that kind of stuff as well. Anyone got anything else to add or ask today? I think Daniel's got a list.
$3.1 million paid in Bitcoin transaction fee. So highest cover.
Yep. I think that was a fat finger exercise, wasn't it?
I wonder if it isn't a money laundering operation.
Yep.
Because you can direct the issue there is that you're fighting with a bunch of other miners, and any one of those miners could come on top and collect that fee. But if you it's a possibility. I don't know. I think, but other than that, it's maybe a fat finger.
So for those who don't know, there was a cryptocurrency transaction earlier on this week, and I can't remember the exact details of it. But generally, when you're buying and selling crypto, if you go via an exchange, you typically buy it at whatever the market rate is, and there are certain parameters you can put in as to, I want to buy it at a particular price, or I want to buy it at the best rate you can get. There's various things now. One of the other things you can do is if you want to push your transaction up the queue so it gets processed faster, is you can pay a higher fee so that the miner gets that reward, and so they'll prioritize your transaction. And it looks possibly as though someone made a fat finger exercise this week, fat finger mistake, and inadvertently paid, was it $3 million or something, Eric? I've forgotten now, for the actual fee. But
yeah, 3.1 million.
Yeah, but as Eric correctly says, that might actually have been an intentional way of making something look accidental, which was actually entirely intentional, and could have been a way of laundering some money in some way. So who knows? We never do quite know.
How?
But wouldn't I'm guessing the miner would collect those fees, and there's a way of kind of making sure that particular miner would have collected that fee. or it got into the bottom?
In theory, no. Okay. In theory, how mining works. It's kind of ironic here. I've actually got my mug, which is my blockchain miner mug, which is a misnomer because you're not actually mining blockchains, you're mining the cryptocurrency on the blockchain. But when the miners are competing every 10 minutes to complete this puzzle, which is this proof of work algorithm for Bitcoin, and they're competing every 10 minutes to win the fee to do this calculation, then it's designed in such a way that you never know which miner is going to win. And this kind of goes back to Daniel's point before about decentralization, because if you could always predict which miner was going to get the fee, then that's clearly not a decentralized system. So in some blockchains where there are only a few miners, there is that risk. But with Bitcoin, you don't generally know even which pool of miners is going to get it. But there are ways, and they are beyond me. And just like I often say, this is not financial, legal, taxation advice, nor is it criminal enterprise advice or offering ways of money laundering. But you can sometimes use transactions in a way which kind of obfuscates the actual purpose. And so there are some things which are paid for in crypto, actually equally could be with any other currency, which is a means of transferring large sums of money without it being obvious what's going on. And I'm not going to go into the mechanics around that. But if you use a friendly search engine, I'm sure if you take a look at how do I launder crypto, then you'll probably get a knock on the door or something anyway.
Yeah. Sorry, Daniel, interrupted earlier.
No, don't worry. I was just going to ask him to explain how it would actually be laundered, but you pretty much cover that. So
I'm trying to remember with money laundering. There's the three things, isn't there? Of placements. I really should remember from my FCA stuff.
Layering.
Layering.
And I've literally just done it in my exams, so I really should.
Yeah, I was just thinking on that. Hey, we're joined by Preston. Hey, Preston, welcome aboard.
Yeah, what's going on? I figured I saw your message in the Telegram chat. I was like, that's cool. So
brilliant. Yeah, so Preston's something of a legend in the crypto world, I reckon. Do you want to tell us a bit more about yourself?
I am so I'm currently crouched down on the floor because I wanted to take this call from the den rather than my office. And the computer is nearly out of battery. But I started in crypto in London back in 2014 and started a company. We forked the EVM when it was still a proof of concept and then tried to sell it to banks as a sort of like package solution. We didn't make a lot of money, but at least we were one of the first people to do that. So that was fun, made lots of friends. And what is crypto, if not the friends you make along the way? So yeah, that's what I did. Now I'm a lawyer in the United States. I have a practice which is both focused on London and New York, DC, the sort of US East Coast. And so I've been doing crypto now since 2014. So 2013 actually was when I started, right at the end. So I've been doing it for just about 10 years. So that's me in a nutshell.
Excellent. Well, nice to see you. I think, were you at one of the crypto conferences in London a few months ago?
Which, it was one of the Brown Rudnick and what's the name of one of our clients keeps hosting them. And so Brown Rudnick did a bunch of stuff, but I'll be back there more often. Okay. I think if it were up to my fiance, I think we would live there. But we've got an office there. I'm actually going to be back in December for a week, and so the London crypto community remains very, very near and dear to my heart. So,
yeah, because it's really. I remember it was a really good event. So definitely one of the better ones for the whole crypto space. And it was always interesting because I've forgotten, I think the person you're talking about who was doing some of the hosting was also talking about his crypto research and about some of the data that he was pulling out on that kind of stuff as well. So yeah, a really good event. So you're actually in New York at the moment then, Preston?
Connecticut. So about 2 hours outside of New York City in the burbs. Typical white picket fence, small dog, big lawn kind of place.
Yeah, that world really does exist, doesn't it?
It does exist. It's real, and it's wonderful. It's amazing.
The Simpsons is based on fact. Excellent. That's cool.
Yeah. Anyway, I'm just here to listen. I mean, if anyone, I'm cognizant I'm late. What have we been talking about?
So it was just a general kind of thing. I'm trying to think of the specifics we were going into before. We were talking about alternatives to Bitcoin to start with, where I was saying, well, actually, there's multiple Bitcoin protocols which have been forked off each other, and then you've got things like Ethereum, that kind of thing. And I think it was Johannes who was talking about CoinGecko, which actually does show the different kind of like types of crypto. And if I was just saying, look up on here, you've actually got on CoinGecko.com, it actually lists out kind of like the categories of crypto. So things like tokens, stable coins, all this kind of thing. So that's certainly worthwhile chatting about on that.
Interesting. I guess maybe a useful thing to contribute to the discussion would be sort of the American perspective as it pertains to the UK, which I don't think a lot of people understand very well because there aren't a lot of people who kind of live mentally on both sides of the pond. So maybe something which I can do this very, very briefly. I'm not going to waffle on forever. But I think one thing we've seen a lot of are American companies starting to, and the reason my camera's off is because I've decided to sit down at my desk and actually do this seriously. So if you give me one moment to, oh no, I just dropped the cable, son of a bitch. There we go. One moment. I'm going to be up and running.
It's quite similar. A few months ago, I was hosting a webinar on crypto and insurance, which is an area dear to my heart. And we were talking about disaster recovery and business continuity and everything, just at the point at which my laptop flashed off with low battery, and I realized I didn't have the computer plugged in and I was about to lose my connection. So
I had a similar thing. I was delivering a talk on sort of US and UK regulatory perspectives, but it wasn't that. It was usually the thing that interrupts my calls is my dog. When someone's ringing the doorbell, and then he has a seat right here, and then he starts going bananas. But anyway, interesting stuff. The UK obviously has recently passed FSMA 2023 into law, which is huge, right? Because it does two things. One, the financial promotions update, I'm sure you guys have all heard about, where all financial promotions are going to have to be approved by an FCA authorized firm or a firm that's got a crypto asset license and has gone through the regulatory gateway legislation, blah, 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 blah. So what that does, what it doesn't do is it doesn't take crypto and turn it into a regulated asset class like the US has done by turning everything into securities, right? Which is good because it means that people can still talk about crypto, they can still sell it, you can still have conversations about it on internet forums. But what you cannot do, right, is send marketing communications within the UK directed to the UK in the course of business, right? So so basically casual conversation, the decentralized stuff still allowed, spot exchanges still allowed, and that's principally the primary point of entry for most people into the space is via a spot exchange. So, and most liquidity, right? I think that'll change when the US starts introducing ETFs, but it's only one step removed. So the opportunities for arbitrage are going to be somewhat limited. That's thing one. Thing two is that it created crypto. It said crypto can also be one of the regulated investments, right, under FSMA 2000. And what that means is that it should be possible, right, after this is passed, for them to introduce crypto-related activities into something called the Regulated Activities Order, which is the list of things that you need to, if you're going to carry them on in business in the UK, you need to have a regulatory license from the UK FCA to do it. Now, they haven't gone out and actually moved anything, strictly speaking, crypto into that yet, but I expect that what we're going to see is things like investment management and other things are going to be defined in such a way that crypto, right, or doing those things in relation to crypto requires a license. But the reassuring thing is that they haven't done it yet. They haven't rushed into it. And they haven't done what the US has done, which is basically assume crypto is right coded politically just because it was 10 years ago, try to wipe it out and basically try to cut off the country's markets from the cryptocurrency markets. So I expect what we're going to see is the US is going to be retarded, right? Not in the pejorative sense, but in the sense of slowing down its growth. It's like driving through molasses. And where we're seeing is other countries and other places like Nigeria, Kenya, South Africa in particular, crypto is taking off, where you have institutional or state failure, and crypto is filling a gap that actually nothing else can fill, right? Because there are systems which are simply missing. So it's really interesting. I've seen a lot of people look towards the UK, exploring the possibility of obtaining regulatory licenses in the UK. Andreessen Horowitz opened an office for the first time outside of the United States in the UK. So I think what we're probably going to see is the UK becomes the hub for crypto it deserves to be, simply because the EU is nuts in terms of technology regulation. And at least for now, the UK is outside of that. And the UK is just saying, listen, crypto is going to be allowed to be crypto within our borders, which is something that the United States won't even concede, right? So they want to take crypto and say, listen, we're going to shoehorn it either into this highly prescriptive, tightly regulated commodity futures regime, or we're going to take it and we're going to shoehorn it into this highly restrictive securities regime, right? Which doesn't really appreciate or account for the fact that most people who hold crypto hold it as they would hold cash, rather than, or, hold it as they would cash or Pokemons or baseball cards, rather than, a brokerage account where they're doing, large volume transactions and not really touching it until they retire. So it's a curious situation. It's going to be interesting to see where things go. I think the UK stands to benefit considerably. It's why I follow the Telegram group, to be blunt. And, if you go peruse my blog, I've been talking for a couple months now saying, listen, open an exchange. If you're going to do it in the UK. If you're going to open a crypto business, do it in the UK. If you're American, fuck the United States, incorporate your Delaware C Corp, open an office in London, do it from, a subsidiary as well, and do it from there. And wait for the US to get more rational. It's a logical step. You can get there from New York in an afternoon. And it just makes sense. It makes
and we speak the same language almost as well, which is kind of
very, very nearly the same language. I mean, it depends on what you understand when someone comes around and tries to knock you up in the morning. But it's my blog, Johannes, is Preston Byrne, PrestonByrne.com, and you can see a link to the blog. No worries, you're welcome. You can see a link to the blog from there, and there's a contact form on the front if you want to follow up. Just punch something in there, and I'll follow up by email. But from anything that you see, so yeah, it's really I'm very massively bullish on the UK. I think the markets and generally the attitude in the last 30 to 60 days across the industry, right, both in the United States and outside of it, has turned from being very dur and suboptimal and not optimistic to very optimistic and bullish, as people are feeling the sort of tide turning from all of the bankruptcies, and in particular the disposals of assets in relation to the bankruptcies. So obviously there are a bunch of big bankruptcies: FTX, Three Arrows, BlockFi, whole bunch of others. Then Binance, of course, didn't go bankrupt, but in fact, I think it was Kirkland who negotiated, Kirkland and Ellis, like whichever lawyer did that deserves the fucking Nobel Peace Prize. Like that was an amazing piece of lawyering, that they got an amazing deal. The penalty, right? So people are looking at Binance, particularly in the legal community, and they're saying, and they don't understand the context, right? So they're saying, hold on a second, like, let's look back. MT Gox went bankrupt. Mark Karpellis went to prison. BTCE violated all the money laundering rules, and Alexander Vinnick went to prison, right? So Binance, right, violated all those same rules allegedly, and now they've got this settlement. What's the deal? Well, if you look at the terms of the settlement, right, what's interesting is that not only are they going to be doing, firstly, they were 85% of global volume, right, which changes the equation. Secondly, they've got a professional compliance team in there now, and they're looking to make the business fully compliant. Thirdly, they're agreeing to do compliance backdated all the way to 2017 when they got their start. So essentially, all of the suspicious activity reports they should have filed will be filed under the new regime, right? So it's this huge treasure trove of intelligence that the United States is going to get as a consequence of this deal that they've cut. And they've agreed to supervision, which is incredibly expensive and very onerous. And so, I'm sure it was a necessary element of the deal, but that notwithstanding, it's still something which is not a given, or something that they had to do, in the ordinary course. So I think with that resolved, right, a huge question mark over the future of the industry, which is what happens to Binance, is now gone, right? Because the answer is nothing happens to Binance. They pay their fine. The shareholders get the haircut from that. Presumably, CZ spends a little time at the pleasure of Uncle Sam, and I think the guidance is like 18 months. So, and he probably won't be involved in the business directly ever again. And they continue trading and operating, but in a fully compliant way with the U.S. rules. And like, okay, cool, like game on. Like that was the other big question mark is Tether, right? And so the question is what happens there, right? And I don't think if anybody knew, what would happen with Tether and what the consequences of whatever happens would be, they will be very wealthy in very short order. But nobody knows in truth. So it's an interesting time to be in crypto. I'm massively optimistic. You can feel it kind of sucks the down periods because entrepreneurs tend to get screwed with bad terms and because financing's tight and all the rest of it. I think those days are very close to being at an end. And when that happens, it's going to be a very interesting time to be in the space. And so all of you it's the quiet periods are bad, but like nothing makes up for what happens when they turn around. It's so exciting. And I think it feels like we're on the verge of one of those moments. So that's my 2 cents about, the US, UK regulatory picture and, the sort of viewpoint that I bring to crypto when it comes to England and Scotland and Northern Ireland and Wales. So yeah, that's me in a nutshell.
Cool. Thanks for sharing it. And it's really interesting because I think some of that resonates with me. Certainly, where you're talking about like the US, UK, and UK being a kind of a competitive environment for crypto, because the politicians are all talking about, oh yeah, we want to be innovative, we want to be world leaders, blah blah blah. The regulator, the FCA, is behaving like a regulator does. They're being very, very protective. But the one advantage that the UK does have is that we only have the one financial regulator. Whereas with the US, you still have the battle of, well, is crypto within the CFTC, SEC, etc.
Well, you have the PRA, right? So you actually have two financial regulators, but one of them is for G-SIFIs only in their capacity as globally significant financial institutions, right? So, but yes, you're right. Everything is under the FCA, under the Regulated Activities Order. The perimeter is clear. If it's inside the perimeter, they regulate it. If it's outside the perimeter, they don't. Yeah. But I mean, as a general rule, the FCA's business, right, is to make sure that people who are running their job, as they see it, is to make sure that companies that are operating regulated financial businesses are run by people who have been background checked, are not defrauding the public, and that's about it, right? So they're not going to sit there and do shit like the SEC does, where they turn around and they ding ETF applications and approvals for years and years and years in a row because they don't like the asset class. That's not their role. That's not how they see their role. Their job is to say, listen, here's the list of requirements, right, under the handbook, which you need to comply with if you're going to be operating this business. If you comply, right, and you've convinced us that you're able to comply, then we'll let you through. What we're seeing with a lot of the crypto businesses that are coming through is that they are not, a lot of the applications they're getting are not, shall we say, complete. You have teams which are inexperienced. And so what they'll do is they'll find some technical violation or some shortfall, and because the team doesn't know what they're doing and it's not going to be safe really to let them operate this business for the investing public. But if you've got an experienced team, well advised, presenting a comprehensive application of the FCA, chances are pretty good they're going to let you through, which is just not the case in the US. So yeah, there's one regulator, they know their job, and the job is not to call political balls and strikes. It's just to make sure that people who are applying for these businesses have the internal capability to run them, right, and that they're obeying the law.
Yeah, it's interesting as well that the UK FCA has actually recently been given an extension of its remit, thanks to the latest Finance Act that came out last year. So traditionally, a regulator such as the FCA has got two responsibilities. One is to prevent systemic failure of the financial system, and the other is to protect consumers from being defrauded or whatever. The UK Act that came into being explicitly called out an additional requirement, which is that the FCA should now provide a competitive regulatory environment, which is kind of just admitting to what regulators have been doing anyway, which is try and make a country attractive for companies to move to without compromising the other two things, because obviously you don't want your financial system to collapse, and you don't want your grannies to lose their money under the bed type thing. So
the UK has had, I mean, the city has been its golden goose for 30 years, right? 30, 40 years. I think prior to Brexit, it accounted for something like 15% of the country's GDP. Now, prior to that, you saw sometimes the EU and particularly the UK would do things that weren't allowed in the United States in order to gain some regulatory arbitrage. The Eurobond market, for example, was something, the US dollar denominated Eurobonds was something that the UK did for years. And I can't remember why that wasn't allowed in the United States for a while, but anyway, it's something that they've done for a long time. So that market, they were early. The financial services market in the city was a big deal for 15, 20 years, well, longer, that's it, 30, 40 years. And then Brexit happened, right? And I think they're kind of looking and saying, okay, well, what's the next big thing? Crypto benefits from being one of those candidates, right? So if we're focusing on the space, crypto is a pretty good guess in terms of what the next big thing in finance might be or what it might have something to do with. I certainly don't see too many other candidates on the horizon. So I think it's been missing a use case for a long time. I think that those days are about to end because I think AI is actually the use case for crypto, not in the sense that crypto enables AI, but rather that crypto is a digitally native way of metering attention and content and other things that AI can't crack yet. At least there was some reporting that over the weekend that Q-Star or GPT-5 at OpenAI had managed to crack AES 12, and most people think it's bullshit. But we do, as far as we're aware, it can't crack SHA-256, so we should be okay for a little while longer. And it can't break any of the ECDSA Bitcoin's curves. So as far as we know, which means you could potentially use things like Bitcoin and everything else to slow down, AI flood of emails into your inbox, or at least monetize that in a way that makes sense on the internet. So I think that there's kind of opposite sides of the same coin. Crypto just happened to come first. But nobody needed it because why would you? And then AI, I suppose, is now emerging as this new thing. And it's going to be really interesting to see how these two things, one of which is defined by, the immutable laws of the universe in mathematics, and the other which is also defined by those laws, but, the immovable object versus the irresistible force. It seems to me logical that those two things are going to interact with one another. And then, and really only then, are we going to see this explosion of crypto financial services, because the crypto is what makes sense in this world where AI has proliferated everywhere. So it'll be interesting to see what happens. I think the UK's approach is prudent. It's doing all the right things. It's not shutting down the industry. It's attracting the brightest people to the country now. I know a couple of teams, American teams, that are either moving there or have already moved there. And I'm not going to say who, but it's going to be really interesting to see. So
excellent. Well, thanks for sharing that. I'd just like to open this up really for anyone if they've got any questions or any additional things they'd like to add, because we're whizzing through this and we only have 12 minutes left. Elena's staying nicely quiet there, but she almost looks as though she's got something where she's going to say, what's FSMA or something.
Thanks. I've just been listening really attentively.
Cool. No
I need to go away and re-listen.
Yeah. The other thing Preston may not be aware, this is actually quite an international group. So Elena, as you'll detect from the accent, is actually from Ireland. Well, she actually isn't, but she lives in Ireland. And yeah, we've got Gabrielle, who's actually in Ireland, even though she was primarily from Spain before that, I think. We've got Eric, who's over in the West Coast in LA. And the rest, I don't actually know where the rest of you guys are based, or gals. Hey, Eric's woken up now. He's out of his pajamas.
mean,
Yeah, I'm out on the West Coast, LA.
Just keep reading, guys. If you're newer to this, the thing to do is just make it your obsession, hobby. Don't spend all your money on it. Just read everything you can. If there are basics about cryptography that you don't understand, that was me once upon a time. I went and bought a basic book on cryptographic principles, and I brought a copy of Applied Cryptography by Bruce Schneier, and I read them both. And that was that. It's like, okay, now I understand, the primitives and how they apply to things. And really, you don't, in practice, like from a business standpoint, you don't really think about those things too often, right? It doesn't, you're mostly, what you tend to mostly be focused on, at least in my line of work, is like, if I call it the nuclear bomb test or the space marmot test. I'm obsessed with marmots, so I talk about them all the time on the internet. But we'll use nukes for this example, because I don't want to confuse anyone. So let's say your dev team goes and packs up and goes to like the middle of the woods, and you decide you're going to have a big dev retreat, and you get nuked, right? You bring your servers with you, you bring your developers with you, you bring your families with you, you bring your cars, everything, your dog, all of it, and then you get nuked by the Russians, arguendo. Ask a question: does the application still work, right? And if not, why not? And if you ask those two questions, you're usually saying, okay, there's a decentralized application, so there's some code that lives in different places. There's some oracles that live in different places, and different entities or persons or computers are responsible for signing certain transactions or authorizing certain state changes on the chain. What are those, and how do they work, right? And so really, once you understand the basics, and then you go and say, okay, it's just about keys, right? Because blockchains don't do anything on their own. They only respond to state change, to API calls, basically, that are pushed to the chain by a node signing a transaction with a key. And so if you think about it in those really basic terms, and you say, okay, who's got the keys and what do they do? And what authorities do they have? Everything else just like falls into place. So keep reading. If there's anything you don't understand, if you have any questions about anything I've said, please just shoot me an email. And
Preston's great on Twitter as well. He's well worth following. Him and Stephen Pally, definitely two guys to watch. And for me, I actually came out with this phrase when I was presenting at a conference a few years ago. Cryptography is simply the mathematics of keeping secrets. Think of it like that, and you won't go that far wrong. So sure, we can start talking about AES 256 and SHA 256 and ECDSA and all that kind of thing. It's all ways of keeping secrets mathematically. Ultimately, that's the way it works. So Preston, again, brilliant for sharing. That's really good. And quickly going back, Johannes made the interesting point about the FCA earlier on, that they haven't got Gary Gensler, which is probably another interesting thing. Although the new head of the FCA, if I remember correctly, who came on board a few months ago, is from New Zealand, if I remember correctly. Quite an interesting guy, and a breath of fresh air as well with that. So interesting stuff. So we've got 7 minutes left. So an opportunity, if anyone's got any questions or anything they'd like to share, then fire away.
About what Preston has been saying earlier.
Mm-hmm.
If I wanted to read more about blockchain and AI and the prospects and the future and the possible ways of development, where do you think I can find information?
It's all bullshit and everyone's making it up. Nobody knows. I think is the answer. So I think if you pick which, I think if you look really like your blockchain is still super, because Binance in their announcement, they announced the settlement, right? And they said they're the biggest exchange in the world. They do 90% of the volume. They have 150 million users. 150 million, that's nothing, right? So when they've got 2 or 3 billion, then you're looking at something which is really tangible. So compared to like the big social media services. So it's still very early. There's not a lot of overlap between blockchain and AI. They're two completely different disciplines. And I think that there's no overlap. It doesn't make any sense. I think the only overlap you'd see is in data analytics. So blockchains are these big open databases, which AIs could, presumably you could feed the data into an AI, say, tell me something about this information, right? But other than that, I don't think there's you're not going to see a whole lot of good information about both that's anything more than speculation or conjecture. So your guess is as good as mine, to be honest with you. Which is great, because it's great.
I'd offer, if you want to kind of understand the technology a little bit more, then one of the straightest talking people in the space is Andreas Antonopoulos, who actually talks about the technology and how it works. He doesn't start trying to become a visionary type thing. So he talks about the practicalities, and he's done some great YouTube explainer videos about how the various technology works as well. But as Preston says, it's interesting. We are seeing this kind of like the intersection between multiple technologies. I describe it as the new triangle of forces, which is blockchain, AI, and IoT. So the Internet of Things, where you've got the Internet of Things is creating loads and loads of data. Blockchains are storing that data, and AI is analyzing that data. And there are companies who are looking at how they can do that in bigger and better ways. But yeah, definitely there's a lot more to come. And as to what's actually going to happen, I agree. Everyone is just coming up with theories, and it still distresses me, having been in the crypto/blockchain space for about 9 or 10 years now, how everyone's still talking about how it is going to be used as opposed to how it's already being used. So we shall see on that.
Yeah,
Preston, I have a question for you. Just because you're, I think you have a good grasp of the space. What is your perspective on the role that Bitcoin and probably crypto can or maybe will play in blurring the line between money and assets?
I think
because they're regulated and they're treated in very different ways. And with Bitcoin, your asset, if that's what it is, can be used to make payments. So it really looks like money.
Yeah, I think so. Like, there are a bunch of different answers to that question, depending on which lens you're looking at it through. If you're looking at it through, for example, taxation, which is the principal one that comes to mind. Obviously, Bitcoin is not treated as money because money, the money you have in your wallet, you don't incur as long as you're operating in the underlying medium of exchange in that jurisdiction. Then you're not going to realize any gains or loss depending on how the value of the money fluctuates, right? They just treat it as the common unit of exchange. I think there's some other, so that's Bitcoin. On the other hand, you have to calculate and compute your gain or your loss on every transaction, just as if you were dealing in pork belly futures or shares or anything else. So every trade, and it's different in the US than it is in England, I'll note, because remember, in England, or in the UK, you have a different way of determining whether something is an income receipt or a capital receipt. In the US, they don't have that. What they do is they just have a bright line rule saying, if the acquisition and disposal occurs in any 12-month period, you're a short-term capital gain. And if it's a longer than 12-month period, it's a long-term capital gain, which is at the capital gains rate rather than the income rate. So I think on that, for tax stuff, I think we need law reform is the short answer. I don't think there's any real blurring. You just look at the code, determine what the rules are in the jurisdiction, and then generally speaking, with some very limited exceptions like El Salvador, right, which isn't going to be relevant to anyone unless you're living in El Salvador and you don't hold a U.S. passport. But
I think that there are some. So to speak about capital gains means to have very clear definitions about what purchase and sale means. Right. And generally, if you're going to do it if you're going to come into a position with the sovereign currency of some country, and you're going to exit for the same sovereign currency or another one, then that's pretty clear. But what happens when I buy a house with Bitcoin? Did I really sell the Bitcoin? Right. Because in fact, you make the argument that I'm now bartering. Right, and barter is actually a thing in I don't know really about the rest of the world, but it's a legally recognized type of trade in the United States, which is exempt from a lot of the rules and regulations for good reasons.
Barter transactions are barter transactions. You still compute your gain and your loss so if you did a Bitcoin for a house, for example, you would still compute the gain on the disposal of the taxable transaction is the acquisition of the house, right? So what happens is at the moment you acquire the house, you close the sale, you send the Bitcoin out, you measure so you would measure what the difference was in the acquisition price in the Bitcoin and the disposal price. You would then have a house, and that would be your new basis on the house. So if the house went up,
I get that, but do you do that for a pair of shoes and a vacuum cleaner?
no, but
Exactly. And that's my point is there's a question of scale here, right? There's a question of magnitude which Bitcoin blurs.
Sure, but most of the time, if you've got like a pair of shoes and you're trading it for a vacuum cleaner, most of those assets in all likelihood have depreciated from the moment they were initially acquired, or there's not a significant price differential, and or it's not reported and it's in the black economy, so it doesn't tend to get reported. So if you technically, a barter transaction, you have to report it and you have to report your gain or loss on it, even if it's impossible to do. In practice, we don't see people doing that. Those types of transactions don't get reported. They disappear into the black market. They're just not captured. Or what they do is someone will do a bunch of sales from a tag sale. They'll aggregate their income from it and they'll say, okay, well, we'll pay income, we'll deposit this in the bank and we'll report X. So it's one of those things where you just don't tend to see a lot of compliance. With Bitcoin, the record keeping is very good, right? So there's really not a whole lot of excuse. And the powers of the regulator to look into transaction histories are immense. So I think one of the things we're going to see from Binance is a ton of tax enforcement, because one of the things you get with tax enforcement that you don't get with, for example, money laundering, is that I think it's a 6-year statute of limitations, but if there's fraud, it's longer. So potentially unlimited. I'd have to look at, I don't know the answer, but I'd have to look it up. I know in England, I think it's 20 years if there's fraud. But again, don't take my word for it. But with that sort of thing, you could look in and say, okay, well, there's been deliberate fraud on these tax returns. And so we're going to look into these records and determine who did what. It's one of these things where it's very, very difficult to escape and actually reasonably easy to comply as long as you've got a tax accountant who has the right software to do it. So I don't think we're going to see Bitcoin kind of being treated or as part of a sort of black market for barter, like other barter assets. If you're selling a bag of rice in exchange for a cow, right, or something like that, what ledger is that recorded on? You're just not going to get that with Bitcoin. So,
folks, I'm really sorry. It's getting into a really interesting area on this, and I do keep saying we're not doing financial, legal, or taxation advice, so that ties in really nicely with that. But we are going to have to close the call, I'm afraid, because we are past the time where we normally finish. So I'm going to have to cut the call off on that, but say thank you very much, everyone who's joined today. Preston, great having you on board. Great insights. Thanks everyone else for joining, for sharing. Do come along again. Hope you all enjoyed it. Hope to see you again next week. Bye for now.
Bye.
Take care, guys.